This video goes over dividends, municipal bond interests, and unemployment compensations. These are three categories of income that you need to know and would help with completing sample problems, assignments, and exams. Dividends are money from the business that are distributed to shareholders of the business. And there are three categories. First, ordinary and qualified dividends, non-taxable distributions, capital gains distributions. Let's start off with non-taxable distributions. This is money that the shareholders have put into the business called invested capital. Because it's invested capital, it's their own money, and now it's just a return of their own money. It cannot be taxed. Therefore, non-taxable distributions. The other two are taxable. Capital gains represents a gain from the invested capital, and that's taxable. So capital was invested, but now they get a return of their capital investment. All right. Ordinary and qualified dividends are also taxable. These are profits from the business, the earnings, the bottom line that is positive, the net income, and now it's being distributed to the shareholders. We will focus on ordinary and qualified dividends, which we know gets taxed. But at what rates? Ordinary dividends are taxed at ordinary income tax rates. Qualified dividends are taxed at a special tax rate, a preferred tax rate we call capital gains rate. Why is it special? Because it is lower than the ordinary income tax rate. Let's take a look at the rates. This chart gives the tax rates for qualified dividends and capital gains. As you can see here, the rates would be either 0%, 15%, or 20%. This first category is the filing status, married filing jointly. Then single, head of household. Let's take a look at single. If the income level is between 0 and $39,375, the tax rate on that is 0%. That is fantastic. Imagine getting a dividends income of, let's say, $39,000 and you would have zero taxed. Now, if that was ordinary income, it would be taxed at ordinary income tax rate, and that would be something like 10%, 12%, so forth, up to 37%, right? But here, it would be just 0%. And 20% if income level was, let's say, $400,000. All right, so that's why any qualified dividends will receive special low tax rates, and any capital gains also gets these special tax rates. These tax rates are called capital gains rates. This is Form 1040, Individual Income Tax Return. I advise you to download, save a copy, give it a file name, and reopen as a working file. Work on it, input the information, save it, then the information will be saved. Otherwise, it might be open in a browser, and then you work on it thinking that when you save it, it's going to be saved with the information that you had input, but that might not be the case. Back to dividends. Dividends on Form 1040 is reported in lines 3A and 3B. 3A is qualified dividends, 3B is ordinary dividends. Now, very, very important. All dividends are ordinary dividends. Again, all dividends are ordinary dividends. So then, if qualified dividends is 500, then how much is ordinary dividends? It has to be 500 or more, right? It could be 500 or it could be 700, because then in this case, there's 500 of qualified dividends and then another 200 of ordinary dividends. But then the 500 of qualified dividends are also ordinary dividends, so a total of 700. Note that 3B, the 700, is going to carry down into the sum total in 11B. and that is taxable income. It will be subject to tax. However, that 700 that's being carried down, a portion of that, which is the 500, will not be subject to ordinary income tax rate. The 500 will be subject to capital gains rate, and the 200 is subject to ordinary income rate. What makes a dividend a qualified dividend? There are two qualifications or two criteria. First is the stock must be a U.S. corporation, and also the stock must be held on for a short period of time of generally 2 months. Fulfilling those two elements makes it a qualified dividend. Then it will be subject to a lower tax rate. Another item of note, under 3B, it says attach Schedule B if required. What is Schedule B? Let's go to it. Here's Schedule B, which is interest and ordinary dividends. It's part of Form 1040. If there is any interest and ordinary dividends, we report the details here and carry the balance over to 3B. First part, interest. That's where we would input. And then second part, ordinary dividends. List the name of the payer and then the amount. As you can see here, it carries down to line 6. And line 6 says, add the amounts on line 5, enter the total here, and on Form 1040, line 3B. So we would input the name of the payer, which is probably some type of bank or financial institution, and the amount, for example, 700. List out all of the names of the financial institutions, sum up the amount, and input that in box for number 6. Then carry this balance over to Form 1040. Enter in line 3B. Next type of income is municipal bond interest. First off, what is a municipal bond? It is a debt security, in other words, a loan issued by a state, municipality, or county to finance capital expenditures, such as building highways, bridges, schools. These are not taxable when it pays interest as income to the holder of the bond. If you see something on the sample problems that comes from the Water Authority of Georgia, for example, or Department of Highway bonds, I'm just making these up, but it's something similar to that, then that is a municipal bond, and interest is not taxable. So then why is that relevant? Because on the 1040, it goes on line 2A. And here you can see 2A, tax-exempt interest. 2B is taxable interest, and attach Schedule B if required. If required, the taxable interest is more than $1,500, or Schedule B is required if ordinary dividends is more than $1,500. Then you have to complete Schedule B as part of the filing of the Form 1040. Unemployment compensation, know that it is taxable income. A lot of filing during the year related to the pandemics, and so it is subject to tax and must be part of the year-end filing, and then tax calculated must be paid. The tax on these income if it hasn't been paid already. At the end of the year, just like individuals receiving the W-2, individuals will receive the 1099-G. It tells how much income was received during the year for unemployment compensation, so that taxpayers know to file the amount of income and make the appropriate payment of tax at the end of the year. In this example, the amount of unemployment compensation is $3,000, and that is subject to income tax. Unemployment compensation is reported in Schedule 1. Schedule 1 is additional income and adjustments to income. Part 1 is additional income. Part 2 is adjustments to income. Additional income, see line 7, unemployment compensation. That's where it's reported. And let's say it's $10,000. It's reported on line 7. All of the additional income gets summed and total up, reported in line 9. Line 9, as indicated here. Enter the amount on here and on Form 1040, line 7A. So the balance from line 9 gets carried over to line 7A. 7A is right here. Unemployment compensation, $10,000. I'd like to bring your attention back to Schedule 1. Just very small, but I guess important enough for me to mention that you should have the names and the Social Security. Missing that, you would have points deducted. Same thing with Schedule B. Name, Social Security number, and any other pertinent information.